Alright, so just finishing off looking at the workings on this question. The payment for laundry includes €2,700 for 3 weeks' wages paid to a replacement fitness instructor. Provide for a further 2 weeks' wages due. So that 2,700, if it's for wages for a fitness instructor, needs to come out of laundry. And do we have a wages? Yeah, we have a wages expense here, so it should be added in to the wages expense. So 2,700 for 3 weeks. So take that €2,700 out anyway. So 3 weeks' wages of 2,700. What are we doing with that? We are subtracting it from laundry on the P&L. So that's just in 5. Just remind me not to put that 11,600 in. I'm going to subtract €2,700 from it. That's for 3 weeks' wages, so I need to provide them for another 2 weeks' wages. So so €2,700 divided by 3 is going to give me 1 week's wage, and then multiply that by 2 is going to give me 2 weeks' wages. So 2,700 divided by 3 is 900, by 2 is €1,800. Add those together, that's €4,500. So I've taken the €2,700 out of laundry. I'm going to put it and the €1,800 into wages, and then the €1,800 wages due, so that is an expense due at the end of the year, so that will be on the balance sheet as a current liability. Alright, and then just note wages then in adjustment 5. I'm changing that. 6 then, wages and salaries includes 24 grand per annum paid to the secretary who also runs the shop. It is estimated that 60% of this salary and €300 of the light and heat, €850 of the insurance, and €400 of the telephone and broadband is attributable to the shop. So they're not going to go in my kind of general profit and loss account. They need to go in the shop account, shop P&L that I'm preparing in part B. So let's just get, so 60% of the salary is what needs to be moved. So in part 6, 24,000 secretary's wages multiplied by 60% is 14,400. And what am I going to do with that? I'm going to subtract it from wages on the P&L, and I'm going to include it in the shop P&L. So shop profit and loss account. Alright, so just note then in wages that I'm doing something else then in part 6. Let's just put a VI after that. The other ones then, so light and heat, 300. So that's coming out of light and heat and going into the shop P&L. So just light and heat, note that you're changing that in VI. Where else are you changing? You're changing the telephone and broadband in VI. And I'm going to change the insurance as well. So insurance, 850. That's coming off insurance in the P&L and going into the shop profit and loss, and 400 of the telephone and broadband. Again, so that's been taken away from phone and added on or included in the shop. P&L. Alright, so that's all that done. Part 7 then, creditors for supplies at the 31st of December 16 were 3,600. So part 7, creditors for supplies, €3,000, 3,600 euro. So yeah, so purchases supplies for fitness center. Yeah, if it's creditors supplies rather than being creditors for shop. So it wouldn't be included here. So this 43,200 is only for cash actually paid. So if that 3,600 euro is a debtor at the end of the year, it's not included here. So in adjustment 7. So you see here, I'm nearly adjusting all my expenses. So just be careful when you're doing the profit and loss account to do all those. So that 3,600 is going to be added on to purchases for supplies in the P&L. And then it's a creditor at the end of the year. So it's owing on the balance sheet as a current liability. The last thing I've got here then is depreciation is provided as follows. Buildings and grounds, 2% of cost from date of purchase. Equipment, 20% of cost. Furniture held on 31st of December 16 is depreciated at 20% of cost. No depreciation is charged on furniture in the year of disposal. So I'd imagine I have a disposal in the accounts if they're telling me that. So this is 8. So we'll do building depreciation first. So that's 2% from the cost of purchase. So there's certainly buildings and grounds 600,000 at the start of the question. And then nothing was mentioned in the adjustments about it, just quick scan down here. Yeah. So we've got purchase of adjacent building on the 1st of April 16. So I'm going to need to depreciate this for some of the year. So what do they tell me? 2% from date of purchase. So you can either depreciate the 600 grand for the full year and 150 for the 9 months, or you could do the 600 grand for 3 months and then 600 plus 150, 750 for 9 months. It's going to get you the same answer. Okay, so let's do some buildings. Depreciation. So it was 600 grand at the start of the year. Multiply that by 2%. And what's that? So 600,000 by 2% is 12,000. So let's say let's do that for the full year and then do the addition. So the 150 grand that you purchased on the 1st of April. So that's also going to be by 2%. But then you only have that for 9/12 of the year. So 150 grand by 2% by 9/12 is 2250. Add those two amounts then, and you've got 14,250 euro buildings depreciation. So that's going to go in the P&L as an expense, or in the income expenditure account as an expense, and it's also going to go on the balance sheet into accumulated depreciation in the fixed assets. Let's depreciate equipment then. So equipment, I've got 80,000 at the start of the year. No other equipment. So equipment, just 20% of cost, and we have 80 grand of it. So equipment depreciation 80,000 by 20% is 16,000. So again, that's going on your profit and loss account as an expense, and it's going to go in your balance sheet as a fixed asset. The furniture, so it's furniture held at the end of the year is depreciated at 20% of cost, and no depreciation is charged on furniture in the year of disposal. So yeah, we see here there's sale of furniture. So furniture, I had 40 grand at the start of the year, and during the year I got rid of furniture which cost 20. So it's just what I don't need to worry about when that happens. So it's just furniture that I have at the end of the year that I need to depreciate. So furniture depreciation is going to be the 40 grand you had at the start of the year. Take away 20,000 euro, the cost of what you dispose. So of that 40, 20 of it is this, which you've got rid of, so take that 20 off. And then you'll see down here there's a payment for furniture, so you purchased furniture as well during the year. And again, you don't need to worry about when you bought that and doing like the 9/12 like you have to do in buildings. It's just what you have at the end of the year. So 40 take away 20 plus 12 is 32,000 euro. That's what you have. That's cost at the end of the year. So that's what you're going to put in your balance sheet as cost. And then the depreciation is 20%. So I multiply that by 20% and I get 6,400 euro. And again, that's profit and loss. And it's going to be balance sheet, fixed asset. And then there's your 32 worked out for the balance sheet as well. We're going to need, so if we sell furniture, which costs 20 for 10 grand, we're going to need to worry about what was the net book value of that and working out a profit or loss on the sale of furniture as well. But I will, I'll do that when we go calculating depreciation. Yeah, I'll do that when I need to during the question. Okay, rather than doing it now. All right, so that's all those adjustments done. Yeah, those depreciation ones, I'm not actually adjusting anything here. It's kind of new stuff which is going to go in as an expense. Balance sheet, the creditors for supplies, I noted that I was adjusting that. Yeah, okay. So those looked at, I'm ready to look at the statement of reserves, and I will do that in the next video.